your attorney should always be involved in your letter of intent. I know it's very common for people to ink out a letter of intent before having legal counsel involved.
Welcome to the Insurance Refocused podcast, where we're highlighting real agent stories and how they are innovating to respond to the changes and challenges happening in the independent insurance industry. My name's Lindsay, and I can't wait to introduce you to my amazing co-host, who just so happens to be my mom, Carey Wallace. Mom, how you doing today?
It's going well, Lindsay. How is your day going?
My day is going really good. It's actually Dad's birthday today, so I am in Hilton Head here at the Wallace household, and we ran to the store this morning to get some little bit of elevated essentials for the day, so it's going to be a good one.
It is. It is. We, the older you get, the less you celebrate your birthdays, but having kids are in the same household at the same time is the gift, I think, It's kind of cool, right?
Yeah. I was telling him that we should do something special, like at Starbucks, mostly just because I wanted Starbucks. And he's like, getting Starbucks is not special. And I'm like, Dad, it's special if you think it's special. Like, view this Americano as a special Americano, and it makes it special.
Yes, it's all in your mindset. It's all in your mindset, Dad. Yeah, whatever. So I'm super excited about today. First of all, it's a beautiful day. It's a Friday, and we get to talk to someone that I get to work with on a pretty regular basis these days. We have David Foate of PFS Law and Agency Point here joining us today. David, thank you so much for joining the podcast.
Hey, Carey. Hey, Lindsay. Good to be here this morning.
Yeah. So, David, for the people that don't know you, give us a little bit of background. Like, who are you? Where do you live? Give us the David Foate story.
The David Foate story. Well, I live in California, so don't hold that against me. We're just doing our best out here, just trying to survive. What about me? I also am a dad, and I've got 7 kids. We've got a great blended family. So 5 from my first marriage, 2 from my current. And so when we have all the kids in the house, most of the time it's a blessing. Having that many kids can keep us super busy. But professionally, I'm an attorney. I've been working in the insurance space, both on the insurance company side and the agency, representing agency owners for more than a decade now. It's been pretty cool. Certified tax specialist here in California, which means I focus a lot on anything tax related, from tax controversy and resolution through business owners and then estate planning. And so a lot of my practice actually focuses in the M&A space, doing mergers and acquisitions and the planning around that, both planning for like how do we minimize taxes and make sure the transaction gets over the finish line, but also long-term, how's this transaction going to impact the family, the business owner? Or if you're on the buyer's side, how are you going to integrate this new acquisition into your current company so that you can have continued growth and long-term success? So that's my practice area. It's pretty cool.
Yeah, I love that. So that's why we get to spend so much time together. I have clients that need, accounting help. I have clients that need tax help, and tons of clients that need help when they are trying to craft the agreement of a buy-sell agreement or a partnership agreement, or even a merger agreement. And, I really struggled in my first couple of years to find people that had experience in all of those areas and familiarity with independent agents, which brought us together, which I absolutely love. But tell me about your experience working with independent agents so far. Like, what percentage of your practice does that make up, and all of that good stuff?
Oh, well, my clients come from all over the country, and I'd say 60 to 70% now are all agency owners. So that area of my career, for some reason, just kind of been the niche where I've settled. It started at the beginning of my career, I was doing captive insurance. So I was actually working for a big international tax firm with business owners setting up their own insurance companies, working with regulators and with taxing authorities to make sure that those insurance companies were compliant with the laws. And then as I transitioned my practice away from doing those 831B captive insurance companies, I just continue to maintain those connections with. I met a lot of insurance producers while I was doing that, so I kept those connections, and that's just developed over time to more and more agency owners.
So I know that I don't have a ton of experience in this area, but one thing that I do know is a lot of agents that I've talked to want to use like local accountants and local lawyers in order to do the things that they need to do when it comes to these things. Is that similar to the experience that you find? Are a lot of your agencies in California, or do you work with agencies nationwide?
Well, naturally, because I'm in California, many of my clients are here.
Mhm.
Where our office is at sits on the border of 4 counties, so I get clients from the greater LA area all the way out to Palm Springs, clients down to San Diego, and then I act as of counsel, kind of like a attorney for hire for some other law firms throughout California because of my tax specialization. So most of my clients naturally are here, but I have clients actually all over the country. Uh, I totally understand wanting to use local attorneys. There are great attorneys all over this good nation of ours. So you're just wanting to look for people that can understand some of the unique risks or rules, regulations that affect your industry as an insurance agency owner. And there are attorneys out there that do that, and they're great. But sometimes people try to dabble into other areas. Like, I'm not going to do family law. It's just not something I do. Um, so I just think at the end of the day, it's just about making sure you find somebody who's got that experience. So whether they're local or somewhere else, just find someone experienced.
Do you think that things change a lot? I mean, obviously in California with the tax specialization, things would change a lot, but how does that impact how you operate with different clients? Are you have to have a special license like an insurance agency in order to operate in each state?
Well, right. So oftentimes you have to be licensed in each state to if you want to actually practice law in that state. Obviously, I'm not physically located in that state, but oftentimes if we're dealing with state specific issues, like state law specific issues, not insurance principle related issues, we'll associate in local counsel to review what we're working on, make sure that there's nothing that we've missed from a state law perspective.
So, David, the M&A space is super, super active. Lots of people are thinking this might be the time for me to sell, and this might be the time for me to grow by acquisition. And, there's many things driving that. Number one, the demographic of independent insurance agencies. More agents are now at retirement age than ever before. We have a super hard market. We have rising interest rates. We have PE that's come here and driven up the multiples. So people are actually questioning and really thinking about, is now the time? Are we at the high? And is it time for me to sell? Or is it the best time for me to capitalize on the fact that there are some people that don't want to innovate? And therefore, I might be able to get some things at a discount because there's pain around potentially agencies that are not able to operate well because of staffing changes, hard market, carrier changes, like all these things are kind of coming together. And so, you and I have been working in a lot together on both agencies that want to buy and agencies that want to sell. I'd love to focus on the buyer side. So if I'm buying an agency, how do I best protect myself and make sure that the contract that I put in place for that buy sell is solid and I'm not going to have some surprises at the end? So give me an idea of things to think about or look for if I'm a buyer.
It really comes down to three main things, I think, when I'm working with clients as buyers.
If you're an agency owner and you're thinking about selling your agency or thinking about growing by acquisition, you need to know what Cake is all about. Cake is an online marketplace designed to help buyers and sellers strategically find each other. One of the worst things you can do if you're selling one of your most valuable assets is to only talk to one buyer. Cake allows you to anonymously list a book of business or a slice or your entire agency for sale, vet those opportunities, and make sure that you've created demand for your agency and therefore the highest possible price. If you're looking to grow by acquisition, it's hard to find opportunities. Cake simplifies that process for you. I highly recommend to many of my clients that are thinking about dipping their toe into buying or selling an agency to check out Cake.
And it's very similar for sellers. I give the same advice to sellers that I'd probably give to buyers. Just on the seller side, we're talking about what you should be doing to prepare for when your buyer comes to the table. And then for the buyers, we're now talking about, well, what should you be looking for? You want to make sure first the company has in place the operations necessary for continued growth after you close the deal. How are you converting those customer contacts over to your staff, your company, your bottom line? What does that management team look like at your target company? Are they going to stick around? Do you have risks of them leaving? Do they have the right to take their book with them or to buy their book back from the company after you've purchased it at some sort of a discount? So you might have paid a little bit of a premium, but they're allowed to take it at a discount. So that's on the operations side, just that long-term continued success. Then we want to look at financials, and we want to make sure we're doing really good financial due diligence, getting a proper valuation. And the third is the legal side. Legally, does this company check off all the boxes to make sure that we're not going to have some surprise later on that we weren't expecting? And that could be something like environmental, could be something like employee issues, could be contracts. A big one is carrier appointments, particularly in this current market. Is this an agency that has contracts with carriers that are the same as the contracts that the buyer has? And if not, are you going to be able to port over those customers to your carriers? Or do you need to expect that you're going to have some cancellations in contracts? So I think those are the main three areas, and we could jump into those however you'd like. But so your business operations, financial due diligence, legal due diligence.
Well, since my background's finance, man, let's go straight into financial due diligence for a second. Like, let's go super, super deep on that because I think, you know, there's this belief that when you get an opportunity to acquire, that agents think, I'm just going to do it at all costs. And I'm going to use a rule of thumb out there because I know my friend bought an agency at X times revenue. Therefore, I'm going to offer X times revenue. So, from a legal and tax standpoint, tell me the things that they should be considering. I know these things, obviously, but I would love to hear from your perspective the things that an agency owner should be considering to make sure that they create a solid deal.
Okay, so that does kind of cross over between financial and legal. So I'll touch on the legal just briefly, then we'll jump on the financial. So on the legal side, the thing I see the most where buyers start having some heartache is who owns this book of business really. A lot of agency owners like to give ownership or ownership rights or right of first refusal to their producers because they're trying to incentivize good behavior. They want these producers to stick around and feel like they're building value. And by entering into contracts to give somebody an ownership interest, buyers have to take that into consideration. That revenue stream may not be there in a year. 6 months to a year, your revenue stream could dramatically shrink after you close this deal. And we can build in safeguards in a purchase agreement to account for that. But nobody wants to have that kind of disappointment where they thought they were buying something great and it turns out that wasn't quite as good as they thought it was going to be. So the first step is just making sure that your seller actually owns the revenue stream they're trying to sell you. Then we get into how are you financially managing your company? Did the seller treat it as their own personal piggy bank, or did they keep good, clean financial records? And so checking to make sure that they have a bookkeeper that is reviewing what they're doing on a monthly basis, that they're getting their monthly and quarterly financial statements. They can produce those fairly quickly rather than having to say, well, sorry, my bookkeeper is behind on this. And they said they can get it to me in a couple months. That raises some concerns. How detail oriented is this seller? Um, did, if they're not detail oriented in their financials, are they not detail oriented in other things, like when they're binding policies, reviewing questionnaires filled out by
That's a big red
customers?
flag in my world. It's a huge, huge, huge big red flag. If you can't create solid financials, it's kind of like buying a house that has a water problem. Like you don't know, am I going to find more water problems or mold or whatever? Like same idea. If you can't give me solid financials, basic information, what am I going to find out when I buy a book of business and all of a sudden your accounts weren't right and I didn't actually buy what I thought I bought? And your first point, holy cow, David, if I could have a dime for every time someone wants to sell a book of business that has partially owned producer books of business and they don't understand why they can't sell it with someone else having an interest in that book, it's a very, very common thing, no question around it. But yes, those two things 100% I think is key. But what about from a tax standpoint? What about when you're a buyer and the seller has different tax structures? What should you be aware of?
Right. You need to be aware if they're an S corp. How are you going to be acquiring this business? Because obviously corporations can't own S corps. We can do reorganizations of business structures if we need to. We can cancel S selections. We can convert businesses from LLCs to corporations if we need to. At the end of the day, you as the buyer are typically going to have a little bit different interest on the tax side than the sellers. Sellers want to minimize taxes that they're going to pay, right? They want to keep as much of the money in their pocket as they can. As a buyer, what you're looking to do is how can I accelerate as much of the depreciation on this acquisition as possible? So typically, they're looking to buy assets. They're going to want to allocate as much of the purchase price to the tangible assets that they can take bonus depreciation on, which in an insurance agency honestly isn't much. You're talking like typically office equipment. Maybe there's some cars involved, computers, staplers, stuff like that, right? Most of it's going to be allocated to the intangibles, the book of business and the goodwill associated with the purchase. But so there's a difference there. Sellers want to sell their equity, buyers want to buy the assets. There are some situations where you can find a middle road where the buyer does get to buy the equity of the company and treat it as an asset sale so they can take that depreciation. But that takes special negotiations with the seller to make that happen, and it's still pretty much more favored for the buyer in that situation. I'm trying to think if what other tax concerns you might think of.
Well, I think you have to know your own tax bracket. You need to know, are you going to continue to work inside the agency from a seller's perspective? Are you going
Oh
to
yeah.
continue to, yeah. So those kinds of
Mhm.
things will change or um, help that deal structure evolve, because it's not a one size fits all. Like
Mhm.
comparing your deal to someone else's deal is a dangerous thing because those details matter, right?
Mhm. Oh, absolutely. Every deal has the same chassis in the sense that you're looking at the same structure. We're going to buy something, we're going to make some promises about the things that we're selling you, and then we need to figure out how do we report that for tax purposes when this closes, and what do we do if something wrong happens down the road. We need to figure out who's responsible for cleaning up the mess. So that's the chassis. But then all the individual considerations between the parties. Sellers, as you mentioned, right now in this hard market, I'm seeing a lot of sellers who are tired. And it's this kind of perfect storm of events where the sellers want to retire because they're getting older. The producers own the client relationships for the most part because they're the ones having the day-to-day contact with the customers. And then you've got this hard insurance market that's just getting harder and harder, it feels like. And so I've seen a lot of sellers who say, I just want to be out. I don't care who buys it. I just want to be done. Take it. and and they're taking huge discounts on purchase price, which, as the attorney, I'm like, wait, no, this is top dollar. Hang in there for another year, and we can get some good tax planning done for you, and we can get you a good exit price. And even that, a year, I'm being told I can't wait a year. I just have to be done now. So it's a good time for buyers in that sense. There's a lot of motivated sellers, and like you said, their friends sold, and their friends probably sold a year or two ago when multiples were even higher than they are now, and interest rates were lower. So sellers are coming to the table with exhaustion, but an expectation of a decent purchase price, but willing to take a discount because of that exhaustion. So understanding as a buyer who your seller is and who your target is, that's key, because from the beginning you can negotiate a letter of intent that's very favorable for you and make sure that you're getting the best deal possible, even in a market where there's fairly high interest rates.
What do you think, as you have gone through a bunch of different acquisitions and you guided your clients through this process, are there particular clauses or things that are included in the contract that you think other like opposing side counsels or even people who are on like your same side of the council but do this for other clients that they're often missing, that they're just not familiar with insurance agents?
Yeah, so some unique things about insurance really focus around, I think, two issues. One is a direct billed commission or agency billed commission. It's an issue I see quite a bit for agencies. People trying to wrap their heads around, well, what is this agency billed commission piece, and how do we properly account for it going forward? Because it's sitting there oftentimes as a receivable in the books of the business. And then you've got cancellations in general. So you're selling a revenue stream that you've promised will continue for a period of time afterwards, typically 2 years, if not 3. And so just being familiar with how do carriers approach cancellations, how is that going to affect the commission stream, and how do we account for that if in 3 months after the deal closing we suddenly have a lot of cancellations and that revenue stream is now gone? What protections did we put in place to make sure that the buyer isn't going to have overpaid dramatically for this book of business?
Do you
Another
often see, sorry, go ahead.
And say another issue that recently has cropped up that I haven't seen before this last 12 months, but seems to be a greater concern, is those carrier appointments, and carriers finding out about deals not in a way that was properly coordinated through their rep, and canceling appointments because they were not going to approve the buyers. So again, if you're a buyer coming into if you come into a deal where you need those appointments that your seller has, you need to review those carrier appointment contracts, identify the clauses that talk about what happens when the business sells, and typically the carrier has the option to terminate, and then begin working with your seller immediately to talk with the carriers and find out, are they open to letting the appointments be transferred if needed.
So, David, I got to tell you, that has been something I also have run into quite a bit. Even when both sides have the appointment with a carrier, there is at risk when something is occurring to transfer and actually shine light on both agencies. We've actually seen where carriers are taking the opportunity to cancel contracts because of non-performance. So let's just put the scenario out there. A buyer is buying an agency. They both have a contract with the same carrier, but the seller has been declining or not producing well, or the actual book of business isn't as profitable as what it should be. The buyer views that as, I can buy this agency as a discount. But what happens is they announce that they're changing, and maybe the buyer doesn't have a large enough book. So honestly, that looks like something I would pay a premium for, because now combining the book gets me to a volume level that I might be in contingency range, right? Like that's one of the synergies that might be a benefit. But what occurs is that carrier looks at it and says, hey, we're actually tightening our belt across the entire country. We're going to cancel both contracts, and now you have a book roll on your hand. That's happened in network relationships, it's happened in just carrier direct appointments. You really have to engage that conversation early in the process and not just assume, well, they have it, I have it, which means we're going to have it, or they have it, that carrier's been courting me for a really long time, it'll be a slam dunk to get a carrier appointment. That does not exist anymore. It's really an interesting dynamic, right?
Yep. Yeah, the last couple of years has been quite interesting on that front, and I think it just highlights the need to continue to maintain and foster those relationships at the carrier uh, the best you can. Just try to treat those people as gatekeepers to the promised land, and just build that solid, good relationship with them.
Yeah, I mean, keeping a secret about a transaction is no longer beneficial. It used to be like all of a sudden everything gets announced. That's when the carrier finds out. That's when your carrier reps find out. That's when your staff finds out. And sometimes that can actually, hurt you as a buyer because there's unthought you haven't actually uncovered some things that might impact how you would structure the deal. You said something earlier that I want to highlight. So if we're thinking about the process of buying an agency and you've never done this before, you find an opportunity, you do, you get a valuation, hopefully. Um, you make an offer in the form of a letter of intent, or you at least start having a conversation and then it gets to a letter of intent. Talk to us a little bit about when to engage legal representation. Is it before the letter of intent, after the letter of intent, and why is that important?
Well, generally, I think every business owner should have a team of advisors long before they think about buying or selling a business. And that needs to be your legal counsel, your tax counsel, your financial advisor. And your financial advisor isn't just the person that does your investments, but who's the CFO for you that's helping you manage your business itself. And so I think with that group of people, and then usually your insurance, whoever's helping you with your business insurance. So that's the team of people you should have with you already, and you should be able to talk with them and start saying, "Hey, I'm thinking about buying." And your banker's probably even part of that advisory group as well. Thinking about buying some businesses. I'm gonna start with a couple small ones, and then maybe work my way up to a larger deal. Um, your attorney should always be involved in your letter of intent. I know it's very common for people to ink out a letter of intent before having legal counsel involved. But the letter of intent is so key because it's the rules you're going to play by during negotiation and due diligence. So we want to make sure that we have it outlined very clearly what you guys are going to be doing from the day you sign that letter of intent to try to get yourselves over the finish line. The sooner you have your attorneys involved in that letter of intent phase, the better off you're going to be in negotiations. Because what I see a lot of the time is we'll come to an agreement on a letter of intent, and then we get a purchase agreement prepared. The buyer sends it over to the seller, and then the seller gets their attorney involved. And at that point now, we've got somebody who wasn't part of the initial discussions coming to the table, reviewing the deal, and is like, well, wait, no, hold on, let's not do this. And then they try to renegotiate the letter of intent. And that's just the quickest way to kill a deal, to take two parties who have already agreed on principles at an early stage and now decide, no, we no longer agree to those principles. It's just a recipe for disaster. So I would say definitely at that stage. But for sure, if for some reason you're a buyer and you decided, I can do this on my own, I'm very sophisticated, I would recommend you're going to need some people to help you through due diligence. And that due diligence phase, a lot of times people think, well, due diligence will just be for a brief period of time. But I've found that really you're constantly doing due diligence all the way up until closing, because you're always working on uncovering new information as the sellers are looking at the contract points and really coming to grips with what they're agreeing to. oh, wait, I forgot to tell you about this, or this happened a few years ago, or, we had this financial thing and we reported it a little differently than it shows, reported a little differently on the books than what really happened. So you're constantly working on due diligence, and having a financial person and a legal person there helping you to understand the documents you're looking at and how that's going to affect your plan for long-term growth is very essential. So I'd say I wouldn't wait any longer than that before
Yeah.
getting somebody involved.
So David, I have one other thing that I think is really important for people to think about, because we all learn best from other people's mistakes. There's no question about this. So if you've never done this before and you've never bought an agency, you're thinking like, this is the time. Like, I've got the right systems in place. I'm growing my agency. There's opportunities around me. What are some major pitfalls or experiences that you've encountered from a legal perspective that other people can learn from? Give us one or two examples of those.
One, are you financially ready to make that jump? So
Hmm.
whether you're planning on financing this deal yourself, you're planning on having the seller finance the deal, meaning they're going to act as the bank for you, or you're going to get lending from a financial institution. But are you financially ready to do this? Have you talked with your financial advisor, your CFO, uh, to make sure you're going to be able to cash flow, figure out what you can afford, particularly in this market with these higher interest rates? So I think that first is just getting yourself financially prepared. Because when you come to the table, you're competing as a buyer with lots of other potential buyers. And some of those buyers could be larger agencies. They could be aggregators who are looking to gobble up your local competitors that you're also trying to buy. So you want to be in a position to be able to pull that trigger and not delay closing while you're waiting for your SBA loan. You want to make sure that you guys are ready to start underwriting right away. So I think that's probably the first one. The second would be probably just understanding that deals take a long time sometimes, and that's okay.
Hmm.
Negotiation back and forth is a natural part of the process. And I see a lot of buyers and sellers get deal fatigue. And it's a
Hmm.
real thing, because you're just like, how many times are we going to have to negotiate this same thing over and over and over again as the attorneys are trying to help you finish the deal up? We understand buyers are excited to get the assets and start making money, because that's what the deal's about. And they typically tie up a lot of their personal assets to make that happen. So this is a very personal and real thing for their family, and a great opportunity for growth. So you just have to hang in there, because the attorneys, although they're making it complicated because they're negotiating these points that might seem trivial to you, that is so key to protecting both sides and eliminating, to the best extent possible, conflict later on and unexpected surprises. So.
So I got to tell you, while you said I'm trying to help you, it made me think of something that I'm sure Lindsay's going to love that I share this with you, but I'm going to share it with you. Lindsay was fishing with her dad in the backyard of a pond, and she caught a
Can we like
fish.
include in this story that I was like 10 years old? Like, I was not even a teenager yet in this story. I know exactly where you're going.
It's the best video ever. And if I can put it in this podcast, I absolutely will, because it's hilarious. She caught a fish.
Good thing you don't do the editing.
I'm totally going to make sure this happens. But anyway, she caught a fish. It's squirming all around, and she's trying to pick it up and throw it back into the pond. And instead, the fish will not cooperate with her. So she slaps it and says, "I'm trying to help you." And it's hilarious. So when you said that, that's the only meme I could think of. Like, listen, we're trying to help you. As lawyers, we're trying to help you. I swear to God, I'm going to find a way to put this in the podcast, because it is fantastic every time it
You're
comes up
probably going to
every
post it
year.
on LinkedIn.
Oh, it's totally going to happen. But anyway, I agree. You do have to realize the people who have been through this before are trying to help you, and it never is what you think. Most people talk about the highlights of a deal, and that And it sounds like, just like Facebook makes everything seem perfect, it sounds like, well, you had an idea to buy an agency and it happened the next day. What they don't see is the duck's feet going under the water forever, and that it took maybe 6 months in order to put that deal together and get it done right. If you rush, you're going to miss things. And as the seller, you're going to feel like you gave up too much. As the buyer, you're going to feel like you bought too much. And honestly, in every deal, everyone should feel like they gave too much. That's how you know it was the right deal. If one side or the other feels like they got completely, taken advantage of, or they got the best thing on the that's going to be something that someone's going to regret. But it does take time. I think it's really, really important to remember, have the right expectations about the amount of time, get people involved who have done this before, and trust them. And if you don't trust them, don't engage them. Like that's so
Right.
important, right? Yeah.
Oh yeah. Yeah.
Hilarious. Yeah, I'm going to send you that video, David. You're going to love it. You've got, it's like the best gem on the planet, I will tell you.
That's rude.
Rude. As a parent, I don't think that's rude at all. That's epic. That's epic.
It's so funny.
That's really funny. David, if there are agencies listening to this who would like to reach out to you and get your advice, or even have you help them with an acquisition, how can they reach you?
Oh, well, they can find me at PFS Law. So it's PFS originally stood for Professional Financial Solutions. So P as in Paul, F as in Frank, S as in Sam, PFS Law. Or they can find us at pfsonline.com. So happy to, even if it's just consultation, people just want to chat through stuff, they're always welcome to call.
Yeah, that's what I love about you. You will take the time with a lot of my clients just to answer some questions and give them some comfort to know the questions to ask and the things to do, and many times help them much more significantly than that. But you'll take the time, and the clock's not like immediately turned on, which I appreciate, because you know what? This is a hard, long process. So anyway, well, thank you so much for joining us. I am sure this will not be your last appearance on our podcast. There's lots of things that we need to talk about from a tax perspective that I'd love to bring you back and dive into as well. But thank you so much for being our guest this morning.
Oh, you're welcome. It was so good to be with you guys. Thanks for having me.
Thanks so much for tuning in to the Insurance Refocused podcast. If you enjoyed the episode, please be sure to hit subscribe and leave us a review so you'll never miss us. Want to learn more about how Agency Focus can help you grow your agency? Head to agency-focus.com or email Carey directly at carey@agency-focus.com. If you need to get in touch with me, feel free to shoot me an email at lindsay@agency-focus.com. Thanks so much for tuning in. We'll see you next week.